All right, welcome back for the episode of Carnivore Trade. Today is Thursday, April 13th, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, week's flying by here Thursday already, and markets here rallying. Again, up 1.3% there on the spiders. Q's taking the lead again today, up 2% there. We see Apple finally waking up. We talked about that one yesterday. Apple is up 3%, over 3% now. And we talked about that 20 moving average holding, and a nice little bid there for the markets. And again, kind of continuing with the theme that I've mentioned over the last couple, I would say the last 2 weeks or so, which is that we don't really want to fight this tape just yet. And, the market is going to probably be supported here. At least for the next, I would say probably week or so. You get into that OPEX type period, things may start to change out here. But right now the market's behaving well. Dips are being bought, and a lot of we talked about this yesterday. Look at the volume, right? There's not a lot of volume here when you have a you have an up move with good volume there, and then you have declining volume on the pullback. There's nothing wrong. And even yesterday, we finished with 86 million shares, but probably 10 of that was in the last 10 minutes or so, and a lot of it was buy volume, looks like. But outside of that last 10-minute surge, there was no volume yesterday. And we had CPI yesterday, we had the Fed minutes yesterday. So if bears were going to, if this was going to be a reversal, this should have been on way heavier volume, and at least 100 million, and we probably should have closed, we shouldn't have had a dip buy this big during intraday. It should have been, a down move, then a small dip, and then a flush, really, for the rest of the day. That's how you know that the move's for real, especially if there's heavy volume. But, I said this yesterday. I know we closed at the lows, but I just didn't really see anything here that made me think that we're going to go down today. And obviously, a lot of people disagreed with me, and they shorted yesterday because we are squeezing up pretty nicely here. Spiders above 413 now. And we're coming off the highs a little bit as we get into the 3:15 time frame. Doing the video a little early. We're doing the live stream with members today after the bell, so I want to get ready for that. But in any case, markets are holding up now. Again, about those red flags that we've talked about lately, that's still in play. So the transports are one, and that's red today. So it was green, was down almost 1% at one point, I think. Actually, I believe it was down 1% at one point, but you can see all the way down to 14,035, so right down to that 14K handle. And you take a look at Delta Airlines. They reported earnings today down 1%. Not a good reaction there on volume. Look at AAL. This is an ugly chart here. Down move, inside bar pattern, a bear flag, and a pretty good sell yesterday. These are not good looks here, and I'm not liking what I'm seeing out of the trucking names. XPO, not a great chart there. JB Hunt, same thing. Ryder Systems, it's holding this 200 moving average, but you got a weekly bear pattern there. So again, not a great look here for the transports. And again, that's important because when you get lower highs like that and lower highs there versus the spiders, that's usually an indicator before a pretty big volatility event. And the transports led, and I mentioned this 1,000 times on here, but we go back to September. We made a new low in the spiders in October, and the transports, they started selling off sooner, and they bottomed sooner too. So again, they are a good leading indicator, and the fact they're not participating is a sign here that we need to be careful. And the same thing with the semis. So semis, they're up 1.25 here, but look at yesterday. Are you above yesterday's high? Not even close, right? And then you look at the Qs, well above yesterday's high. So that laggard ship. Right now, it's not going to hurt anything, but it will. This continues. We definitely don't want to see the semis lagging. We definitely don't want to see the transports lagging. Those are two huge indicators that we like to look at moving forward. The same thing with the Russell here. The Russell's still on the soft side. It is up 1.5 today, but still not above yesterday's high. You're still not above the high from April 3rd. And ask yourself, what kind of pattern is this on the weekly? That's a down move and an inside bear flag. So again, right now, flows are supportive. The market's probably going to hang in there, I would say, for the next week. But after that, especially if we're high on the hog again and we're trading up into OPEX, I'd be very cautious going into next week. This is the type of stuff you get complacency here in this area with the transports lagging, the semis lagging, and I mean, what's up? You know, what's up today other than Apple? I mean, you have some tech names that are higher. I guess Amazon, but the last couple of days it was we mentioned, you know, Berkshire, like that's leading the market higher. Like that's not what I want to see in a bull market. You know, the Dow, you know, like this. By the way, the Dow is into some major resistance now. Maybe it can trade up a little bit higher here, but this is a pretty big wall up there. It is into that 340 level though. But you know, this is not really what you want to see, and you get complacency. Look at the VIX here; we're almost at 52-week lows now. So outside of this outlier here on the 2nd of February, we are at 52-week lows, right? So that's the only other low to make. But if, you know, we get down to the extreme level here and you're up into 420 on the spiders, I would be very cautious. This is how crashes start. I'm not saying we're going to crash, but you know, the market's vulnerable. Let's put it that way. So, but for right now, we're acting well. Volume's light. If that changes, we get a high volume reversal. Then I may need to reverse course on this. But for right now, I think everything is holding up just okay. Again, the Q is holding that 20 moving average. That still has that gap up there. If you get through that, there's a gap at 329. So triple Q's hanging in there just fine. We already mentioned the Russell and the Dow. But again, the IWM, again, you'll have resistance at this gap. Again, all those moving averages up there will be some resistance as well. And then the diamond here, I've been saying 340 for the last, you know, week or so. Maybe it can get into, maybe if it gets through that, you know, you can get to these pivots here, but there's a lot up here. There's a lot of resistance there. That reversal bar, and then this area that you couldn't get through. And you're already extended, you know, you're 315 to 340 in the last, you know, 3-4 weeks. So it's already overbought. So that's going to be a major area of resistance for the diamond. In fact, we could probably extend this trend line out. You know, there's another area. So pivot, breakdown, and then pivot. You get up into that area, that's going to be major there for the DIA. Anyways, over to the semis again. Let's actually talk about them here. So again, we're watching these two big rising wedge patterns. The smaller one we broke through, and you know it back tested and held. So again, I don't like lower highs on the SMH while the market is making higher highs. Never like to see that. And again, this bigger kind of rising wedge, that's kind of the behemoth pattern there. And then this is kind of the smaller one. So we could still theoretically, you know, this one isn't as important. We could still theoretically trade up, you know, to this upper trend line, you know, if the market does float higher. But that's about it. I still don't see a ton of upside here in the SMH. Again, we've talked about this ad nauseum. Lots of resistance there. Heavy volume, declining volume on this uptick. And this, you know, this is going to meet pretty soon. You know, we're getting to a pretty tight range here on that weekly rising wedge there. So SMH, again, that is a red flag for me moving forward. IGV, nice move up 2% today. Again, we closed below that green bar yesterday, so that was a sign of weakness. Again, though, if the market holds up, this can hold up. I don't care about this gap anymore. As we've already filled it, again, 310 will be your major level there on the IGV daily time frame. We already talked about the transports as well, but again, see, they're just turning back to the green, you know, the flat line here. But again, the fact that they're not making new highs, that's a problem. That's a divergence, right? So nonetheless, though, if you get through these pivots, again, we'll look at 14,750. That's about all I see at the moment for the transports. In bond land, 2-year hanging in there okay, nothing terrible. I'm hoping you can't hear the neighbor's motorcycle. If you can, I apologize for that. But in any case, 2-year here, hanging in okay. We have lower highs here on the weekly. You know, you're still holding up. You're still trying to consolidate this. I still just don't see too much upside in bond land in the 2-year or 10-year. There's the 10-year note. Again, it's trying to consolidate, but again, we've talked about this a bunch of times lately. I don't see anything past 3% there on the 10-year, and on the 30-year. It's really around 3.2. That's kind of your max move there, and I don't think this yield move is over with by a long shot, but those are the levels I'm watching right now. XHB here hanging in there okay. Still lower highs, nice little test candle there. It's hanging in there okay. I can't say anything terrible if you get through that. We'll look at around 69, somewhere in that area on the XHB. For the ITB, we'd have to look to about, we'll call it 72 if they can get above yesterday's high. But that one, was a leader the last 3-4 days, and now it is kind of a laggard here today as tech is kind of taking over a little bit. VNQ, nothing terrible here. It's not broken. I don't like that gap up and kind of gap and crap day, and then, you know, again, just struggling to stay positive here, but you still have, you know, a green bar. You're still inside of it on a closing basis. So, you know, if this consolidates, it can get up to that 85.50 handle, and that's really all I see it for the time being on the VNQ. XLF hanging in there, so up 80 basis points. You know, decent move. I'm kind of watching this now. I'm going to get rid of this trend line here. You could almost make a case. By the way, we have bank earnings tomorrow. I believe JPM, let me double check. JPM, Wells Fargo, Citigroup, BlackRock, United Health too, and PNC. So some big banks reporting tomorrow. But you can make a case here that you almost have, you could draw it in on the lows there. I guess you could even draw it in like kind of right there, but you have kind of a channel or even like a wedge, depending on where you want to draw it in. Let's just go with a rising wedge for now. But either way, it's not a bullish pattern. You know, any way you slice or dice it. If I can get rid of this, there we go. So any way you slice or dice it, that is a bearish pattern there on the XLF. But we'll see what we get. You know, if the banks say something that stabilizes the market, maybe they get a bid. The big question that I'm going to be interested to see is, do they talk about commercial real estate? Because there's 1.5 trillion in commercial real estate rolling over pretty shortly, and they're going to have to do that with interest rates at 5%. So we'll see what they say to their shareholders about that. But KRE, still below that 20 moving average, can't even get out of its own way. KBE, above the 20, but still not a great chart either. We'll see what these banks have to say tomorrow. Broker dealers on the weaker side, still a weekly bear flag. Nothing has changed on that front. Over to energy, crude backing off of that 200 moving average. I'm not doing anything with it right now. I do have resistance up in this zone though. So that pivot high and then this pivot high, we'll be watching. You know, maybe tomorrow, well, tomorrow is going to be Friday, so we'll be watching that pivot there. That was that pivot we talked about for months, and said like, hey, this never got a weekly close above that, so we'll see if it does tomorrow. If not, that would be a red flag to me, because if everything's so great and OPEC is cutting production and everything's so bullish, they should be able to get above resistance, right? If it's a bull market, you should be able to break resistance, right? So that doesn't mean that it can't eventually with a higher low, but you know, I've been saying for a while, you got to fill this gap. You know, this is a quarterly gap. You know, it's not gonna. It would just be highly. I mean, look at that. It would be highly unusual to have a quarterly chart and just for it to go to new highs like that and leave that fat of a gap on there. But we'll see. Crude hanging in there okay. I'm not touching it right now though. XLE is holding up as well, establishing above that 100 MA, so that's a sign of strength there in the near term. I haven't really done too much work on this. It probably could work itself up into, I would say, the upper 80s right now. That's about it. For the daily time frame, might even need to consolidate a little bit more, but it looks better here. XOP still struggling with this 100 and 200 moving average necktie there, but you know, if that consolidates, I suppose you can get through that. That trend line's been a good stiff area of resistance as well. And then the OIH continues to just be kind of chopping around here. What a sloppy pattern there. I'm not touching that one either. That is all over the map. You know, 280 support here in the short term. If you get above this pivot, you know, again, then you can talk about 310. So we'll just leave it at that. Natural gas curling back down again today. So I don't know if you guys caught the video I did earlier. I'll briefly kind of go over it, but if you haven't, check it out. It's only like 4 or 5 minutes long. So I was messing around today, and it's funny, interesting. One of my members mentioned this and said yesterday, like, hey, everything's up yesterday. Everything is up except for the dollar and nat gas. And, you know, I just had this kind of thought here. What if we just, you know, I kind of looked at the intradays and I said, wow, nat gas is selling off the exact same time the dollar is. And if you look at it, and it kind of makes sense. All right, so the algos to me are using the DXY and the nat gas as basically positively correlated for the inflation trade. Take a look on the intradays here. You know, it's very similar. So we have this kind of, you know, flat period right here. We had a big surge. This is the DXY. This is nat gas. Choppy, breakdown at the same time, sideways, down move, then we kind of upticked as nat gas upticked, and then they both broke down right before the PPI number. Yesterday, the CPI number, they both broke down. And now, kind of chopping around together. You're looking at the yearly here, or even a 2-year, that big bull market in the dollar and big bull market in nat gas 2021, 2022, they even kind of peaked around the same time. A little bit off schedule, but pretty close. And as we get kind of closer to this double bottom here, the dollar bottomed first, and then nat gas bottomed. It didn't make new lows. It didn't make highs, but it didn't make new lows either. Then we had that little curl down, and then they both kind of peaked around the same time, and now they're coming back in. So just very interesting stuff here. So I say all that to say this. You guys know, obviously we're looking for kind of generally the seasonal bottom in nat gas right around this time, but the DXY is coming into double bottom. We've been talking about that. I've been saying it probably has to go to double bottom ever since we got below this green bar. So really the last month. And if we flip over to trading view so we can get rid of these dojis, because they drive me nuts, we'll see. And this is on an intraday there, so let's go. Here we go. But yeah, there's your double bottom. We're close to that. I think this has to get pierced before the dollar bounces. I'm very interested to see if dollar pierces this level and gets a bid. Does nat gas put in a low? So I'm definitely keeping that on my radar. I know it generally, it's kind of it's not something. It's a little bit off the beaten path, I guess. You wouldn't think like, okay, that's a correlation, right? If anything, you'd think like dollar up, commodities down, and vice versa. But nat gas kind of does its own thing. But to me, just looking at that correlation, it's basically saying to me that nat gas and the dollar are positively correlated to the inflation trade. They were rallying. Look at nat gas Monday, Tuesday. What happened Monday, Tuesday? All those jobs data and the GDP got revised up. So we had hot data. What happened the last 2 days? Cold CPI, cold PPI, nat gas down. So just interesting correlation there. I'm definitely watching that moving forward here with the dollar. Again, we just talked about it. We'll watch that double bottom. I still think it has a little bit lower to go here. Gold did make a higher high, came a little bit off the highs. Again, still very overbought here. It's got a ways to go to get to 2070, which was almost 2080, so 2078 really. It's very overbought here. It's holding up, though. I can't say anything about it negatively, although the dollar is getting close to support, so that may be a sign that it's running out of gas. And silver, just what a rocket ship move here for silver. This is way overdone, and it is going into resistance with this weekly red bar, which is also a monthly red bar as well. So lots of resistance up here on silver, but what a move here. It's up well over 25% here in the last month. So pretty amazing move there for silver futures. Platinum, it broke through those levels, and that's what commodities do. So I said 1040 for a while back here. We pushed up, and I said, maybe you can get to 1045, and it overshoots. That's what commodities do. So it got all the way up to this pivot. It should stall out there. There's a lot of res up here. Maybe 1080. You did get some momentum there. There's volume there. A nice move there for platinum futures. Hope some of you guys caught that. That's why I give these levels out in these videos. Because I do like to give out a few things for free, at least when I see them. So, but platinum, nice pop there, and then copper. This has just been all over the map here. It probably wants to get to 420, 425 now. I didn't like that failure of that green bar. Then you got a failed bear flag. It's all over the map. I'm not touching it right now, but we'll say 420 to 425 here on the daily, and we'll just leave it at that for now. Over to Bitcoin here. So Bitcoin continuing to kind of just chop around. I still give this an upside bias to about 32.5 for now. It might need to consolidate a little bit further to get through there, but it's holding up okay, and it is rallying with the market, making new highs with the market. So I don't see any problems just yet. That may change, though, in the near term, not so distant future there. Anyways, let's get back over to the spiders here. So it's about 3:30 now. Yeah, markets are still at the highs of the day. You might get a little bit of profit taking towards the end of the day, a little bit of backing and filling there. But again, we don't really see too many problems. Nvidia definitely a bit of a laggard there today. That's almost red there. But no real problems here as far as immediate near term. But transports, semis, those are huge red flags. Russell, red flag. XLF, red flag. Very interested to see those bank earnings tomorrow. Anyways, guys, gonna wrap up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.